Good morning, good afternoon, and welcome to the first grain market update of 2022. I'm joined today by my colleague Freddie Humfrey, it's quite a pertinent time to have a catch-up given that we had the January USDA yesterday. I must say, last night's USDA report from a wheat perspective was not bullish, and certainly the market reflected that. Chicago took another dive lower after some weaker prices over Christmas, and I guess it's worth just looking through some of the numbers that the USDA put out with us last night. So, to start with, we've got world wheat consumption being reduced by nearly 2 million tonnes, 1.9 million tonnes, with the USDA stating that relatively high wheat prices compared to other feed grains is expected to reduce global feed use. It's also interesting to note that there's been increases in production in Argentina as well. And at the same time, we've still got a very big production in Australia. If we look more US centric and more US focused, I think there are also some other adjustments. US wheat imports were moved lower, and US wheat exports were also reduced, with demand described as sluggish for both export sales and the remaining US domestic wheat being uncompetitive. So all in all, it's a pretty negative outlook for wheat for the January report. However, I don't think that we can say that the fundamentals of the market now are out and out bearish. I think we've probably moved from a situation where the market was fundamentally bullish based on S&Ds to probably being neutral. And I'd say for now that has dehorned the bull, if you'll pardon the pun. But there are still some weather issues to watch, and certainly for other crops, for soya, for corn, there are some issues in South America. And this graphic here certainly highlights the dry conditions that we're seeing in South America, in Brazil, in Argentina, that may well impact on production of corn and soybeans, and therefore support the whole grains complex. So whilst from a wheat in isolation perspective, we're seeing an increase in availability and perhaps prices not being as fundamentally bullish, I think there is still some areas that we have to watch. From a technical point of view, it's also quite interesting. Freddie, how are you seeing things?
Yeah, thanks, Jonathan. So it's quite interesting on the technicals, as you say. We saw the high on May London, May 22 on the daily back on 24th of November. But what that's really allowed us to do, and just demonstrated there on the screen, is have the potential for a bit of a head and shoulders pattern. So you've got the two blue circled shoulders and the yellow circled head. Now we've been waiting for that 219 support level, which was the bottom of the neckline, to be broken. And we've been testing that, as you can see, with those little green up arrows, and we didn't see that break until over the last couple of days. We've now seen that break, that formation of what we describe as a classic head and shoulders pattern, and that more recent downtrend really pushing lower. So we're trading at around the 214.15 level at the second. So yeah, the market from a technical perspective has turned since the back end of November, and we do see a decent downtrend over the last 6 weeks as a result, and especially now that we break that 219 level. So some really interesting bits and bobs going on the technical side, and maybe a little bit contrasting through December against what was at the time a slightly more friendly outlook on the fundamentals. It's always interesting when those technicals and fundamentals diverge a little bit, and that's one of the key things we look for in that divergence.
Yeah, absolutely. Just to comment on the market activity recently, we've seen old crop come down, and actually new crop has held up pretty well in the face of weaker old crop prices. It's worth noting, I think, that the May NOV 22 spread has narrowed again. There's probably more risk premium still being put in for new crop. But I think in summary, this market now is going to be all about timing. As we move forward over the next few weeks, 4 to 6 weeks, we wouldn't be surprised to see prices come down, providing there's no negative weather issues or indeed any unforeseen geopolitical events which spark a bullish rally. Maybe some short covering March, April for Q2 might give another uplift, but otherwise it's going to be all about new crop weather as we move forward into the spring.
Yeah,
thank you. Yeah, absolutely, Freddie. Thank you again for tuning in. Really appreciate you taking the time to catch up with us today. If you've any questions or any comments, please don't hesitate to reach out to us. Our contact details are, as always, at the end of the video. Thanks again. Thanks, Freddie, for your time.
Cheers.